what's the biggest risk to business owners in 2026? So it could be property business, could be any kind of business.
This is where I definitely agree with Stu's point, and that it's all about this year. I would say for business owners, it is really all about liquidity, basically being savvy, making sure you're reviewing your business model, getting your working capital position to a positive position if you can, being less reliant on debt if possible. But it is all about liquidity and cash flow to make sure you can trade through. If anything happens with the marketplace, it's just going to means trade slows for a bit because people hold sit on their hands again, and then so if you can get yourself into a good position, both liquidity wise and exposure wise, you can ride out that storm, and then if opportunities come up because people start failing or there's a surge, you're prepared and ready to go.
Nice. Stu?
Yeah, I agree. I think I'm just going through 3 refinances now on some of my earlier HMOs. I'm putting as much as I can. I actually disagree with the debt position. I think getting yourself in as much, this is not financial advice, short term, well, no, yeah, passive income debt that's being paid by tenants, but basically increasing my debt position because when they do print a load of money, which is inevitable, the debt that you hold is going to become weaker over time. So while they'll lend you against
Yeah,
assets,
longer term fixed debt like that. That's
yeah,
sorry.
but
Yeah,
yeah, obviously, yeah, short term 7, 8, 10%.
short term business financing. Yeah.
Oh, yeah, avoid like the plague. Yeah, make sure you're liquid. So what I'm doing is I'm trying to build a bit of a cash position to take advantage of opportunities that turn up. And obviously, you can pick A players. You know, like we were talking about the ground up. You know, having people when you are never stop recruiting, never stop talking to people. You know, and you'll be surprised who rings and what opportunities they're looking for, who have been following you and feel like they want a bit of a change and can make your business better. So never stop recruiting. Look for talent all the time, and just use the time to sharpen up, cut off dead systems, dead processes, dead staff that aren't going in the way you want, and just have a bit of you build in a bear market, I think. And if we're going into a sort of 2, 3, 4 year bear market, don't overbuild, don't overcommit, don't overspend. Just stay frugal, really.
Did you see that graph, that diagram that says that the 18-year cycle predictions, and the past few years has felt solid. It hasn't felt like it's been a boom since the post-COVID cash injection era, and but now it all feels like it's going to go south again. But I thought we were already at the bottom.
Yeah, but you're most bullish when it feels most bearish. So that's why you don't totally come out of the market. Just hang in there, hodl for dear life, and just ride it out. But if they do print the money, they're going to have to print because all the money they printed through COVID has now got to be repaid. So we're in this 5-year cycle, and they gave everyone globally a year off. So where it runs in a 4-year money cycle, it's now over 5 years. This is going to throw a lot of people off who play in the money markets. Is that a lot's going to happen this year. What I thought was going to happen last year is now going to happen this year.
I think there is some hope there where America is just going from strength to strength. They're forecasted to print a Q4 6% GDP, which is just madness. That's nearly the top end growth
Because
that
they've taken
China
over
have had.
Venezuela's oil. No, I'm joking.
Well, yeah. Well, it's just inspiring growth into the economy. Trillions and trillions is going back into the industrial base
Did you see how much
manufacturing.
money he said? He said they generated from the import tariff from the resetting the tariffs from a US perspective. They said, oh, well, I don't know. Basically, I watched that video. Trump said they're just basically making so much money now.
But it's not just from the tariffs. It's not just from the tariff revenue. It's from the incentive of big capital allocators like TSMC, who are putting 200 odd billion into chip fabs in America, and all of that's creating all this rapid growth. But the reason I say that point is because it will help stabilize the dollar globally, and that keeps trade a bit more liquid and fluid, which could help in a world where there's more localized pressures on things like the pound and the euro and the yen and things like that. So hopefully we see some stability there. I would
Do
just
you
say
do
on
you
the
think the oh, go on, Ryan? Go on, go.
go on, D, tell me what you think.
No, because you were just talking about America and chips and all that sort of stuff. See, there's a lot of talk. Maybe we'll talk about it later, but when, if at all, do you think the AI bubble? One, do you think it is an AI bubble? And when, if at all, do you think it will burst? And what do you think will happen?
Well, the interesting thing is if AI I think the initial rush of AI is going to accelerate GDP and economic growth. It will accelerate everything, but the consequence of a deflationary technology means prices come down, and consumption can only be, we only have so much human consumption, not necessarily in pounds, but in terms of electrons, at least for now, in terms of how much energy we can consume, there is some kind of human limit. So I can't imagine that this deflationary technology can propagate to an exponential and retain an exponential curve on GDP growth. There must become a GDP lag and the GDP downslide because of this exponential technology that creates exponential abundance, and people just can't earn enough money to pay for it, and because it gets so cheap, it's just where does the economy kind of start and end? And I think there's going to be we're going to have to value the economy in a different way. GDP will no longer work. It'll be something more like GDP per electron, like how many electrons do we consume, how much energy per capita are we allowed for, which then will be represented in abundance of resources, as opposed to a financial metric, because finance may not be a worthy instrument to measure people's well-being in the not too distant future. So there's going to be a huge change, and I think how governments have to measure things. Not sure what you guys think of that, but
It's deep, man. It's when electricity becomes free, and the price of tomorrow. Jeff Booth, the book I spoke about on my pitch, but yeah, it talks about everything becoming cheaper over time if measured in a different currency. And obviously, you're in a credit-based system where everything goes up and up and up. It's manufactured to go up because GDP increases, the debts have to be repaid. If the states are at 38 trillion and they're going to 39 trillion now, and they're going to print another 6 trillion, it gives everyone the golden ticket to print their currency at the same volume, so the same ratios. So everything on the surface looks the same. The exchange rates look the same, but there's more velocity in the system. That then means that goods and services, the price of a cup of coffee, the price of houses all go up. And there's a cap now. They can't really push the housing market up anymore because it's so unaffordable for so many. If you look at every sort of every major city around the world, it is all already unaffordable. Look at Denmark, America.
That runs on the assumption that monetary units are the key arbiter to global stability and success. But I think with that additional surplus that's getting injected into technology, electrons are kind of going to take the place of those monetary units, because electrons are, it's atoms, it's moving, they help move atoms. And I think if we see that in such an abundant way, it will dissolve the whole concept of a monetary economy. It will be a different type of economy, and we have to measure things.
I need to brush up on my science. I don't know what's going on here. It's like
Let's get
Jimmy
back to it.
Neutron explaining
Energy is
economic.
the new currency. Electricity is the new currency. That's what basically we're working into an electrified economy now. So the amount more energy and more.
What's the best way to monetize electricity, Stu?
We'll be walking around with lamps, will we?
Best way to balance the
Can you
grid,
pay
mate.
for
There's
this?
only one
Bitcoin.
monetary system that is cheaper than anything else, and that is
This is why
the one
Bitcoin
and
could
only.
be. It's why it feeds straight into Bitcoin's hands. It's an interesting play, but we're starting to get into like monetary science and stuff. We're not exactly sure what could happen there, but I think Bitcoin is.
Well, I'll tell you what, it's the silent revolution, and I feel more confident about talking about this because when I was talking about it pre-event, you just don't know if you're talking to people going, for God's sake, would he shut up? But when half the room put their hand up when I said understands Bitcoin, is buying it regularly, and loves what this new monetary policy is, when half the room went up, I went, right, we're fighting a good fight here. Let's continue to talk about the benefits of Bitcoin. Let's bring Dorian into the 21st century, and let's not try and leave any man or woman or child behind the old system.
Good.
That is the mission now. That is the mission.
People love that. They love that breakup from talking about property to just talk about something completely different.
But it's the world's best digital property, which is why we talk about it, because it's property. We all understand assets rise. We just don't understand why assets rise. And until you educate yourself on the monetary policy and what happens in the world, you've been brainwashed to thinking is money. And then you realize there's a whole paradigm shift that you can learn about. It's addictive and it's super fun to learn.
Piecing into that conversation we would just have about a flip from a monetary economy to an electron-driven economy, Bitcoin is, through the mining and the protocol, and there's a lot of stuff behind Bitcoin that makes it Bitcoin. That is a way to regulate those electrons and a way to have scarcity in a world of abundance. And it may just be that currency is something that is used, whether it's for economic benefit or political benefit or voting rights or something. There'll be a play for Bitcoin because it's it's the only way to do it. The fiat system doesn't work. It can't do it in the same way. It's on old Cobalt mainframes where you could just print as much as you want. You just can't do that with Bitcoin. So it's a very interesting future coming ahead.
The deepest level my brain can get to is that you'll be able to put Bitcoin into a car, and in a deflationary world, the Bitcoin never loses value. So you'll be able to put Bitcoin, which is energy, into a car and never have to pay for the car again, because the Bitcoin inside the car will run the energy of the car. That's the sort of the deep as I can go in terms of where I think this new world goes. It's mad, but you have to do a lot of reading. You have to surround yourself with a lot of people who understand this, because we are literally 0.1% of the population, 0.01% of the population that are trying to understand it. So there's a long way to go, and everyone's so early. We're super early on this change, but I can't see any other alternative. So,
amen, sister. Let's get back to questions. I've got my one take on this, which is slightly different, is for biggest risk to business owners in 26 is creeping unit costs. And I think it's something that business owners can get complacent on. You've got higher taxes. We've had crazy amounts of inflation. We've got high energy costs. You've got a slightly more scarce consumer market. There are unit cost increases that you may not be directly aware of, that may not necessarily be material and labor driven. There could be other aspects around your overheads of your business, around the supply demand curve in your business, that are creating higher marketing costs proportionate to unit sales and things like that. And I think people have to start getting really quirky on how they're saving unit costs. Is something we're very focused on as a business, to try and make sure we can reduce unit costs as much as possible so that we can create margin spread without needing to increase prices. And then there's increasing prices. So I think unit economics is going to is already very important over what's happened in the last few years, but to stabilize yourself in the 2026 run, I think unit costs and trying to reduce where you can, getting clever with how you're distributing overheads, offshoring aspects if you can, remote workers, things like that. I think that is where a lot of businesses need to start going. Unfortunate for things like restaurants and hospitality sectors where you're very, kind of labor intensive, but find ways to be more effective on your marketing, to be more effective on your pricing and on your sales, on package stuff, on affiliates. And I think that's going to be quite a big play this year, particularly with taxes that are shooting up and are going to shoot up again, unemployment and things like that. So that's what I'd say to business owners broadly. Okay, so for us individually, guys, this is about your business specifically. What's a key hire or resource that you'll need or really want this year? What's something you're thinking of, Stu?
I've got a couple. Well, just what we're talking about, really. Integrating AI into the business is something that I don't want to just shy away from, because it'll be too late. Our competitors will be doing it and thinking about it, and obviously taking advantage and early movement in this, whether it's the design. I mean, we're already doing it, to be honest. We're working with using AI to help do 3D renders, 3D walk rounds. We're going to double down on the lofts this year. So I need to really focus on the pipeline and how we're going to get in front of more bodies. Build a bit of a sales team, I think, to try and relieve a bit of the pressure for me having to run around and be everywhere in the front end of the machine. So I think I'm ready to scale that up again, and keep control of money, really, making sure that we don't overspend, we don't overcommit. It can be very easy in the development world to have a $7,000 bill, a 30 grand bill, a 20 grand bill, a 10 grand bill, a 5 grand bill, a 20 grand bill, and they all stack up. And obviously we've been lucky to this point because we've sort of got out of hot water and we've dug ourselves out of holes by being frugal and sensible in the past. We've made risks that balance the amount of cash flow we've had. We've had to leave a few $100,000 into one of our sites, which is great. It's cash flowing and it's a good investment. Would we have done it any other way? We could have sold the building, but we've done it. So we've had taken a few hits last year, but we're in a market that's declining, and we all know it's just secular. So we all know that in 4, 6, 8, 10 years time, if in the fiat world, if they're going to print shitloads more money, these things are going to be worth 4, 8, 10, 12, 30 million pound properties. But you still need cash to survive tomorrow. So yeah, cash control is important as well. So yeah, that's what I'm doing. AI, sales and cash, pretty much the three main metrics of business, really. Nice. Never take your eye off the ball.
And D, what's a key hire or resource this year, mate?
Yeah, good. So I'm currently bringing on a FD, which is key because we're currently going through and in conversations with some institutional funding, so trying to get a large funding line over the line. Coming back to the point we was talking about earlier about getting your capital structure in place, and stable is important. So that's quite big because there's a lot of work we need to do. And also the other key hires really for me is just land people in West Midlands, Southwest, because twin tracking with this capital raise. I just want to go all out in what I'm doing and trying to just bring in deals, pipeline of deals, baby. Let's go. Land people, deals, money, right leg, left leg, right leg, left leg. Whoop.
Hey, yep. Love that, mate. Okay, nice. I'd say for me, it's one of those, isn't it? You ask a business owner this question, you could think of like a million different things that you want to bring in, but the key ones, definitely. I brought in some key people last year that should be playing out this year. So I'd say for me to make sure the London move works and get the office up and running, the key one for me is bringing on more top quality consultants to help on the capital raising. That's I want to be a team of 8 in London. Ideally by the end of summer would be nice. Get the office just before summer and have that team stabilized in there, and a team that's capable of raising 10 to 20 million a month would be where I'd want to get to. I.e., the team may not be achieving that this year, but that is a team that is capable of achieving that. And then I just need to nurture that team, nurture their pipeline. And I shouldn't need many more.
What's your
hires.
capital raise target for this year?
So we have month on month now, we have about 10 million of equity come to the table. So qualified equity. So last month was actually 12 million. This year, this month, we're on track to actually beat that already. But that's qualified equity coming to the table. We're doing things like we're going to start creating monthly investor days where we take a tour bus round and people can come up and see us. And that way makes it more efficient compared to individual tours, but we can also make a full day of it. So what can we do with that 12 million coming to the table a month? How can we get more and more of that over the line? But also, how can we turn that into 20 million? Turning it to 20 million is just a case of increasing the resource in that area. But how can we convert more of that equity is the key. But also, repeat business. We'll start to stack up on what is already stacking up, but we'll start to massively stack up on that over time.
Have you got the jobs in line to service that amount of interest? What do you need to
Yeah.
focus on? Finding more deals?
Yeah, we'll always need to focus on finding more deals. But I've got most of the key team members in there on the delivery side. So the construction now has a very good brain to it, with Richard, who's just come in as managing director of that business now. There's obviously Kane's already there in a commercial sense. We've got John there now as contracts manager, Gary on procurement, who's shit hot, like seriously good resource. And then we've got Emma, who's on the admin, and then 3 site managers. We're employing another site manager. So the team is there to, like, the brain is there
Service
now
it.
to stabilize that construction aspect. The refurbs and domestic stuff, I need to bring in another senior head at some point this year, but I'm not too concerned about the trickiness of finding that hire. And lettings just keeps propagating like over time anyway. So I'm not overly worried. Acquisitions, yeah, but we get, with a lot of noise that we create, we get quite a lot of business coming to us. So I'm not too worried about the delivery side now compared to I was at the start
Your
of
pinch
last
point is more cash, more capital. That's your accelerator, isn't it?
Yeah, I mean that's always going to be the lifeblood of our business, is raising more capital. But the thing is the repeat business. Raise capital this year, 50% of it may come back next year anyway, on top of the new raises. So it's a very healthy model in that way, because that's diluting obviously initial costs of the clients. So we're set up very well this year, but definitely need more consultants.